Hello and welcome to the Collective Shift channel. Matt here with another weekly macro and crypto update where I share the biggest news from the past week and help you stay up to date on all that's going on in the macro economy as well as the crypto industry and the crypto asset class. Starting as always with the Australian economy, and it's been a bit of a rough week on the Australian stock market, with basically all of the sectors in the red and the stock market overall in the red, which has mimicked European stock markets as well as US. So there has been one sector in particular that has performed strongly outperformed the others, and that is the energy sector, which I will get to soon about why that's the case. It's just quickly, it's basically because of rising commodity prices, but I will get to that in a bit more detail in a few minutes. Why is the stock market overall trending down and having a bit of a rough week or two? Mainly, it's easy to forget that the stock market had gone on a really months long run of gains, monthly gains. So any sign or any sell off is healthy in the grand scheme of things, and was, in some people's opinion, was well overdue for a sell off. And just on the other factors and fundamental factors that people are attributing this sell off to is, as I've covered in previous weeks, just some uncertainties around China's property development industry, and also just nerves and uncertainty around inflation getting a bit of gaining a bit of steam, and so inflation rates rising, I guess, a bit faster than what people are expecting, or central banks or policymakers are expecting. So that's essentially it. What happened today also was worth noting in the Australian economy was the Reserve Bank, so Australia's central bank. They announced, I think for the 10th month in a row, that or the 10th meeting in a row, that Australia's interest rate will remain at 0.1%, and there'll be no change to other monetary policy tools as well. So all staying the course there as far as Australia is concerned, and nothing really to report there. So moving on. With the Evergrande news, so as you've likely would have seen, China's biggest property developer has really been in the headlines the past 3 weeks or so, and especially the mainstream media. I think, as I've said in previous videos, corporate bond markets and stock markets have known about Evergrande's issues for the past year and like multiple years really. So there hasn't really been a shock from this news, is I guess what I want to emphasize once again, which is different to something like the GFC, for example. So yeah, this, as I've said in past videos, this hasn't been as negative of a shock on the market as many were fearing it would be. And even in the past day or so, Beijing or Chinese government has come out and stepped up its efforts to limit a possible fallout from what could be an Evergrande collapse, signaling that the government is willing to prop up healthy developers, homeowners, and the real estate market at the expense of global bondholders. So I wanted to update you more just to share what's been going on with this Evergrande news. It's been a lot of just posturing and just kind of kicking the can down the road for the time being, and I will continue to update you likely next week on any more developments in that area. Probably the biggest story for the past few days especially has just been uncertainty surrounding whether the US will raise its debt ceiling. So a debt ceiling is a self-imposed cap on that the government sets for themselves in the US, how much debt to get into, and dozens and dozens of times, and this has been agreed by BRAINZ to be raised. I definitely remember 2010, early 2010s, 2013. I think there were essentially pretty much the exact same like, oh, the US government is going to run, to shut down because they can't operate because they won't have any money left. And both parties never agreed to raise the debt ceiling. And this is the same kind of discussions that you're seeing in the media. You're seeing this play out. In my opinion, it's kind of just getting a bit too sensationalized. I think there are reasons to be concerned, but I would be very surprised if both the Republicans and the Democrats don't come together and just agree to raise the debt ceiling once that's deadline, which some people are saying is going to be October 18. Others are saying it'll be later in October. What's that deadline? It's essentially just when that debt ceiling is forecast to be hit. So I think that's a reason why stock market's a bit jittery in the past few days. Why is it such a big thing? Like, what happens if the debt ceiling doesn't get raised? It could pause paychecks for federal workers, Medicare benefits, military salaries, tax refunds, and social security checks, and potentially more. So it really is just something I expect will continue to contribute to short-term volatility in the stock markets. But if you're a long-term investor or even medium-term, I don't expect this to be a huge problem. And I think in a month by now, we kind of will forget that it ever happened. Okay, probably one thing I really want to touch on is just this continued, as I've covered in previous videos, this continued issue of not issue rather, but just the continued rising of oil prices and other commodities. I think last week we saw aluminium go up to its 13-year high from memory, and yeah, the likes of copper increasing and coal prices as well. So why is that such a big issue? We'll start with oil. At the moment, OPEC Plus, so it's like a global consortium of countries that get together every month. The biggest oil producers in the world get together every month and just come together to agree on what their supply schedule is going to look like for oil. So how much oil they're essentially going to put into the supply, the global supply of oil. They came together and there was a lot of expectation that they were going to agree to actually increase that supply because there's been such a shortage all around the world because of reasons like exiting the lockdown and essentially the reopening of the global economy. However, OPEC Plus did not agree to lift oil production significantly. So that was against market expectations. Rather, they just kind of stayed the course on their original supply schedule, more or less. And that was significant because, yeah, it then caused oil prices to increase. And now I think it's at a 7-year high in the past 24 hours. We've also seen that be the case with coal prices just surging due to just a global energy shortage for those same reasons I touched on before. Why do I want to even talk about this? Like, why should you care about that? It's not really just... I think the implications are more significant than just an effect on the stock market. The main thing I want you to pay attention to is just how this will contribute to the growing narrative of inflation rising by, I guess, inflation all around the world increasing by rates that were faster than what, I guess, central bankers and policymakers had expected. So why does that even matter that inflation rises faster than expected? So what is that? What does that mean? It just means that prices of goods and services are increasing faster than expected. So that isn't going to be good if that continues, which in my opinion it will. That isn't good news for stock investors and really just economies in general if inflation can't be, I guess, calmed down and kind of just made less severe. So the reason why these energy price increases are not good for inflation, so the link I want to kind of really emphasize to you is that rising energy prices then increase the cost to produce and the cost to manufacture things for businesses and companies. So if that is elevated, if that increase in coal or increase in oil or increase in aluminium, if those costs stay elevated, then those businesses and companies are just going to be forced to reflect those increasing costs as increases in prices for consumers. So increases in prices for consumers is essentially the definition of inflation when you take it on an economic wide or economy wide standpoint. So that's essentially what I really want to get across, is just watching these increases in commodities is just one more real pressure on inflation that central bankers just don't need at the moment of what already has been inflation starting to creep up. We've seen central banks already starting to react to this, such as I covered, I think a couple months ago, we saw several South American central banks increase interest rates to kind of calm down inflation and reduce the heat. And just starting to see, I think it was Norway last week, and then the Reserve Bank of New Zealand is expected to increase interest rates tomorrow, mainly to kind of as a response to these growing fears over inflation being too high, which is not good. You don't want inflation to be above 3% over many months or many quarters. Okay. Moving on to the biggest crypto news for the week. One of the biggest items was the SEC, or the Securities Exchange Commission in the US, deciding to delay their decision on 4 Bitcoin ETF applications. So ETF's exchange traded fund. It's just an instrument that gets listed on stock exchanges and things like that for everyday investors and institutional investors to, I guess, invest in. Why was this such a big headline for the week? It was mainly because there's been hopes that a Bitcoin ETF would be approved this year after, I think it's been 6 or 8 years of the SEC continuing to decline Bitcoin ETF applications. So that was a main story from last week. And we have seen Gary Gensler, the chairman of the SEC, kind of been commenting publicly of his favoring of a Bitcoin ETF that is backed by futures. So futures being like derivatives products, as opposed to physical Bitcoin or actual Bitcoin. There were kind of hopes that a futures-backed Bitcoin ETF might be approved, at least at the start. And then eventually what would be much better, in my opinion, would be a spot Bitcoin ETF or an ETF that's actually backed by, Bitcoin that's being purchased off of the secondary market. So as opposed to futures, which is just a derivative and essentially not backed by any tangible asset or underlying asset. So why is this Bitcoin ETF decline so important? It's more just to reiterate that an approval of a Bitcoin ETF would just be a huge validating moment for the whole asset class and the whole industry. Yes, Bitcoin ETFs are approved in other countries such as Canada and Brazil, but having it approved in the US would just carry so much more weight and would just be a huge milestone, really, and in my opinion would really cause the price of Bitcoin to rise significantly in the short term, just because of how long it's been for a Bitcoin ETF application to be approved. It would also make it easier for institutional investors to gain exposure to Bitcoin as well. Okay, other big news from last week. It was probably one of the biggest kind of exploits or vulnerabilities in a smart contract that we've ever seen, as at least in the DeFi space or decentralized finance. So it came out last week that about 162 million worth of compound tokens or COMP tokens were up for grabs in an upgrade gone very wrong. So some people, yeah, are billing this as the biggest ever fund loss in a smart contract incident, yeah, in history. So essentially, it was just you can read more about it in the show notes below, but there was just an error with the developers deploying this update to the Compound protocol, and it essentially printed a whole lot of new. It added a heaps more new comp tokens to the supply of all comp tokens. So I wanted to bring this up more just because it's a reminder that, you know, Compound is one of the more reputable DeFi protocols, and it's just a reminder of how experimental and yeah, and how risky this technology is, this blockchain technology and smart contracts. I think people can get carried away in this asset class, just assuming and just kind of getting a bit blinded by the risk of how risky some of these assets are because we are living and breathing it every day. But I think it is worth just bringing up because, you know, something that we try and really push to members, and just publicly, and even myself to family and friends, is just how if you're going to invest in crypto assets, yes, you can have um, life changing gains financially, but you should also know that any investment you put in could you should be, at least my advice is to go in with the mindset of this all of my money right now could essentially go to zero and I could lose everything. I think that's a bit more. Some people would disagree with me that, hey, that's a bit too extreme, but I like going from that default mindset just to kind of emphasize how experimental and how new this technology is. So yeah, another huge, I guess, vulnerability and exploit last week out of Compound. And I believe that some of these beneficiaries of these extra tokens that were essentially minted or created, some of those people have actually been sending those comp tokens back and to essentially help out the Compound project. But that's just out of their own discretion, really. So we'll be watching to see how that kind of unfolds over the next few days. Okay, NFTs or non-fungible tokens are a huge week for NFTs once again. Starting things off with TikTok, so a social app that is used globally now these days. They announced their first ever NFT collection, TikTok Top Moments. Bit of a mouthful, designed by some of our community defining creators and inspired by the trending videos they created. So to see such a huge, globally renowned company and app like TikTok adopting NFTs in such a big way was a massive news last week, and again is important for you to know about because it's just bringing so many other types of users into the crypto ecosystem. I've said it before, but like the DeFi summer or the DeFi summers, I'm sure you may have heard it, which was about 12 months ago to date. That was seen as the biggest, I guess, sector wide boom in the crypto asset class ever at the time. But this boom in NFTs has just dwarfed it, in my opinion, in terms of capturing heaps more variety of users and people just in general, and capturing them and bringing them into the crypto ecosystem because of how widespread the applicability of NFTs are, as opposed to something like DeFi, which was really just concentrated on people with maybe financial knowledge or developer knowledge. Whereas you're seeing NFTs, they're bringing in and including people from all walks of life, whether it's artists, photographers, sports, like athletes, and then celebrities, and then also, yeah, just people that are wanting to feel part of a community, with NFTs also being tied into communities as well. So the adoption of TikTok was just another, yeah, huge milestone for crypto last week, and for NFTs more specifically. Notably, this product is being made available on Ethereum and will be powered by Immutable X, which is a second layer or a layer 2 solution that's deployed on top of Ethereum. So yeah, that's a great achievement by the Immutable X, or the team behind Immutable X, which is Immutable, which is based in Sydney here in Australia. So yeah, just a huge milestone for even the Australian crypto industry as well. It was a really positive news to see. So excited to see this roll out by TikTok. Dapper Labs, another just enormous NFT, I guess, company, for lack of a better term. Dapper Labs is the entity behind CryptoKitties, which was one of the first NFTs to really to really gain a huge amount of adoption. They're also behind NBA Top Shots and the Flow blockchain as well. And last week it came out that Dapper Labs is now also going to bring NFTs to the NFL. So just another huge example of adoption there. And from Dapper Labs here, you can see that, yeah, Dapper Labs will deliver for NFL fans worldwide the moments they've been waiting for. So yeah, just another way for sporting fans, to really just become more engaged and feel more connected to athletes, I guess, is the big benefit here, at least for fans of sport. NFTs tied to sport, and there's a bunch of benefits obviously for the actual sporting organizations and the athletes themselves. So very exciting there. Sticking with more adoption news, we had Shaquille O'Neal announced, like, yesterday, that he's releasing his own collection of NFTs in partnership with Eternity Chain. So yeah, that kind of goes through his career and essentially ties NFTs to depicting different scenes from his career. So just another example of a high profile athlete and celebrity getting involved with NFTs. We saw Shaq a couple of weeks ago, I think, purchase an NFT and make it his profile picture. And now he's gone a step further and actually is about to launch his own NFT collection. And just more adoption news, Gary Vaynerchuk, one of his NFTs or his collection sold for 412,000 equivalent US. So yeah, just huge numbers, and just more reflection that this craze in NFTs isn't going away. Another reason why it won't be going away is just because the amount of venture capital pouring into the NFT industry and funding these projects that are building out the NFT infrastructure, so such as marketplaces and certain tools like websites and analytics, and then obviously the NFT projects themselves, which are developing these NFTs. So in this case, reports coming out that Axie Infinity, probably the biggest pioneer really of NFTs being incorporated in a game where it's a play to earn game where you can essentially earn a living by playing the game. They are reportedly going to be raising 150 million in a Series B round at a valuation of $3 billion. So that would be enormous if that comes through, and just the rate at which Axie Infinity is growing is just mind-blowing. We saw AXS, their native token, hit a record high just today, I believe, and earlier this week, they announced an airdrop. So they distributed over $60 million worth of AXS to their early adopters. So people who played before October 2020 were airdropped, or airdrop, yeah, if you don't know what that means, it's just essentially sent free money, free tokens. So those early users of Axie Infinity were received in total $60 million worth of AXS, which is just unheard of in any other any other area in the world other than crypto. And they also announced staking capabilities. So AXS holders can now stake their AXS. What does staking mean? It just means depositing your cryptocurrency or crypto assets, sending them to a smart contract address where they sit, and you as the staker earn a yield, or another word for yield is you earn an interest. Basically, think of it like a bank account where you send your AXS in this example to a smart contract, and you essentially earn interest on top of that, to really strip it back to as beginner of an explanation as I can do. So no, very, very exciting there. I wanted to also bring up NFT Fest Australia happened last Thursday. I watched some of the videos on Thursday night, I believe, and some on my lunch break even on Thursday. It was just spectacular to see. So I think this NFT Fest Australia only got announced in August. It wasn't really any business leading it or anything. It was just a whole community driven initiative. And to see so many speakers all agree to present at NFT Fest Australia, it was just like such a great moment to watch some of these videos and to see the chats just blowing up, and to see such reputable figures providing their opinions on all sorts of things. You even had people from the A-League, so a soccer league, a football league here in Australia, the Melbourne Victory, someone from Melbourne Victory, I think a general partner or someone was there, discussing ways that they could get involved with NFTs, and then also someone from Australia's National Basketball Association or National Basketball League, the NBL, was also there, and talking about ways that they're going to be announcing NFTs. So just that sporting and NFT kind of collaboration or integration of sport and NFT is just going to continue, and looks like here in Australia that will really take off as well. And then, yeah, obviously you had just talks on all other sorts of aspects of the NFT space, whether that was the technical makeup of what is an NFT technically, which dove into, I suppose, more of the code and, what is metadata, how is an NFT created, and then you also had aspects from the lawyer's perspective on, what rights do you have as an NFT owner. Then you also had conversations about the confluence of gaming and NFTs, and how you can integrate NFTs into gaming, and the metaverse and things like that. So I highly encourage you to watch all of the videos that have been uploaded onto the NFT Fest Australia channel, and yeah, definitely would recommend you checking it out. Looking here now at the Bitcoin price, and one thing I really wanted to get across was that, yes, whilst the stock market has really been struggling in the past week, it's been very interesting to note that Bitcoin and ETH and the broader crypto asset market actually hasn't fallen, which is very notable because about in July, August, and September, the correlation between stock market and crypto assets was as strong as I have seen in quite a while. Definitely the strongest it's been this year. And so what do I mean by that? It meant that when the stock market had a really good day, it would mean that Bitcoin's price would go up. And then conversely, or vice versa, if stocks really crashed, Bitcoin would crash. And that was really, I guess, bringing people a bit down in the Bitcoin and crypto space about, hey, we always talk about Bitcoin being an uncorrelated asset from global equities and things like that. but that really wasn't the case, and it wasn't being the case. However, in the past few days, we have seen that uncorrelated price action, and Bitcoin is really holding up in the past few days amidst all of this crash and nervousness in the stock markets, and more importantly, the sell-off in tech stocks, which is often even more correlated with cryptocurrency price action. So that's definitely notable, and I will be looking forward to monitoring that, whether that correlation or lack of or weak correlation really persists. Because yeah, you're seeing Bitcoin here now on the daily holding above, it's reclaimed and surpassed the 50, 100 and 200 day moving average, which for a moment there in late September, it had actually lost all three of those moving averages, which are just so, significant for any investor, any trader. Those three trend lines are so significant just because the market pays so much attention to them. So this is really, really healthy price action for Bitcoin to actually get back above all three of those major trend lines, and then more importantly, actually close above it on consecutive days. We've got 1, 2, 3, 4. So we're looking like it's going to be 5 daily closes in a row of Bitcoin above this 50-day moving average, which is really promising stuff. And on the RSI, or the Relative Strength Index, momentum indicator, Bitcoin really isn't showing that much, isn't really in oversold territory yet, which would be over 70 or over 80. So there's definitely some more room to move to the upside without things getting too overheated. Looking at Ethereum, and that's tracking at 3,400 US dollars at the time of recording. And again, is now closing above the 50, 100 and 200 day moving averages. And its RSI is even more towards neutral than Bitcoin at 56, which 50 would be neutral, and anything above 70 or 80 would be overbought territory rather. So an indication of things just getting too hot, and then a sell-off would be inevitable, at least in the short term. And vice versa, anything under 30 or 20 would be a signal of, hey, things have been oversold way too much, and it's likely that prices will rebound in the short term. So really, really promising on the charts there for Bitcoin and ETH. I personally added to my position in ETH, I think a couple of weeks ago, and yeah, the on-chain analytics as well are really favorable at the moment in terms of just long-term Bitcoin and ETH holders aren't really selling their positions or aren't really selling any of their holdings, which is a metric that I really place a lot of value in. And so, yeah, that's essentially where Bitcoin is at, and Ethereum. We're also seeing just the NFTs in general, just the volumes really starting to pick up back to levels that were more reminiscent of, the April and May craze that we saw earlier this year, with a bunch of new NFT projects that have really started to come through on the rankings, such as CryptoToadz, the Humanoids, Galactic Apes, Anonymous. So definitely so many opportunities for investors to make a lot of money in NFTs. And more importantly, and the stuff I like more is also just the community aspect of it, that you can really build relationships and such when you do purchase an NFT, and you do get access to certain communities and Discord groups, things like that. Okay, just I wanted to finally just touch on a trend I have been seeing just in the past 48 to 72 hours. It has to do with NFTs, and it's just the rise of essentially kind of NFTs being used for staking. So I wrote down a few here that I wanted to bring up, and that is essentially, yeah, like yield generating NFTs. So I think Nathan or myself will be doing a post for members about this, about the different ways that NFT projects that they're starting to evolve in terms of in terms of I guess just the innovations that's embedding into the NFTs, and it's really presenting an opportunity and putting the pressure on other NFT projects to release tokens that NFT holders can essentially stake and earn these tokens. So it's more just a meta, kind of a broader trend of the intersection of DeFi and NFTs. So decentralized finance and NFTs kind of they're almost on a crash course to intersect. And in my opinion, you're going to see just heaps of innovation continue to come out in this space. So just some names I'm seeing in the past 48, 72 hours are like ZombieToadz. They have a token called BRAINZ, so BRAINZ, which if you're a ZombieToadz holder, you get to stake your ZombieToad and earn these BRAINZ tokens, which are essentially a representation of cryptodes, which are purchased by this ZombieToad vault. And what you're doing if you are a holder of these BRAINZ tokens is essentially owning part of a bigger NFT. So it's a very primitive and very new trend, but it's one that I'm confident I believe will continue to grow. Because it's because it's just bringing together communities and aligning incentives. So that's what the brilliance, like the innovation, one of the core benefits of tokens is that they can align incentives if you are clever with your design of the token itself and how the supply works and things like that. Some other ones I'm seeing here are MutantCats. So again, similarly, you can earn fish by staking your mutant cat. And again, a bunch of benefits you get as a fish holder. You can get access to, again, a fractional. So mutant cats are, I guess, a spin-off of this Cool Cats NFT, which has just exploded in popularity and price. So when you earn fish, you're essentially earning a fraction of a Cool Cat NFT, which a Mutant Cat DAO essentially owns. So in their vault. So it's a very new trend, and one that I will be looking forward to updating members on over the coming days, or Nathan as well. And yeah, just some other ones I'd seen like Genesis, CyberKongz. They've got their banana token. And yeah, I think Cool Cats is coming out with their milk token. So it's starting to get just a bit back to in that DeFi summer when you had that food frenzy kind of phase of that mania, where there were a bunch of tokens coming out which were just like ridiculous seemingly. But then you had some that came out of that mania, and now they're some of the biggest projects in DeFi today, such as Sushi and Yearn Finance in particular. So yeah, looking forward to seeing more innovation in the NFT space. It happens every day, to be honest, and it's wild to see such rapid innovation. But that's something that I'm going to be focusing on over the coming days. Other things I'll be focusing on are, I expect layer one blockchains that aren't Ethereum to continue to gain adoption. Why is that the case? It's because there'll just be more incentivized programs released by the likes of Avalanche and Phantom, and Salo and Near Protocol, Cardano, Polkadot, Kusama, and there's some other ones as well, Terra, that will be launching incentivized programs to really try their best to gain adoption in the short term. So I expect the tokens of those blockchains to really outperform ETH in the short term. And moreover, the protocols and apps deployed on these blockchains, like such as Terra, such as the ones deployed on top of Solana, I expect some of the ones that gain the most traction, I expect those tokens to perform very well also. So yeah, that's what I'll be focusing on over the next week or so. Until then, I hope you stay safe and enjoy the rest of your week. And thanks for tuning in, and I'll see you again next time.